COGS against that revenue are relatively very minimal. That's why you see such high gross margin. Is that power and that value going to draw more towards the one or two dominant platform businesses, or will it remain in the hands of the linear incumbent enterprises? Jeremy Schwartz, who is WisdomTree's head of research, went on Bloomberg yesterday. And one of the things he spoke about was Platt, the ETF that includes platform businesses.
Modern platforms, digital marketplaces. So it tracks things like Twitter, eBay, but also the London Stock Exchange. So anything people are sort of moving across on the internet on. You're going to be overweight tech and communications, obviously. Let's look at the tail of the tape here. These aren't the best products to compare it to, but if you look something like ARK, or FDN, you can see some similarities there. I think the non-US exposure here, you get more international in this one, and you're gonna have the similar market cap weighted. So it's like one of these, but it's very different as well. Now, I want to introduce this new function, Drive Go, which just came out, which is perfect to use on this. It goes next level and shows you other things that the ETF is exposed to. So for example, the stocks in this ETF are very much have positive sales surprises. That's a tailwind, that's good, obviously. A lot of cash, a lot of ROE, but you're going to be a lot of dispersion on what sell side thinks. That's a headwind. A lot of volatility, and the dividends. You get no dividends here. So this is going to show you the different ways to look at the ETF. So, but beyond that, as we all know, what's really going to jumpstart this is whether it performs well or not.
Of course, it always comes back to that. Now, still with us is Jeremy Schwartz, Global Head of Research at WisdomTree. So, Jeremy, when I looked at the fund and what it contained, it seems like it was e-commerce, e-payments with some exchanges thrown in there for good measure?
I mean, it is really trying to be, if you think about how is business transforming, you hear a lot about this asset light where you don't own the production, you own the means of connection. And when you think about, as you guys gave in the lead, growth, how do you find growth? And all the smart beta factors that focus on value, and even WisdomTree got to start focusing on value. Mm-hmm. And we're saying, how do we get more growth exposure? Is there a business model that's changing the industry? And these platform models from Uber and Lyft and these asset light seems to be a growth story that you can get around. And they're growing earnings and sales. Like the sales is 3 to 4 times faster than the standard S&P 500 companies. And their margins, whereas the standard margin, gross margins are 30% on S&P 500 company, these are in the 60s. So there's a really good business case that this is the future of a lot of business and that these are growing faster with better margins.
Kind of get the gist of it, right? I mean, I think what Jeremy was getting at there was talking about growth, higher margins, makes sense. That these, very often, if you look at any kind of marketplace business, there's GMV and then there's revenue. And GMV doesn't fall into your traditional P&L. So the revenue is that take rate. If they're taking 10, 15, 20, 25% off of the GMV, that's revenue. So your COGS against that revenue are relatively very minimal. That's why you see such high gross margin, as Jeremy was mentioning. On the other side of that, if you're not a marketplace, you're probably a content platform or a platform that has a lot of advertising revenue. Same kind of story, right? If you're a content platform, you're a social media platform, your inventory is basically nothing, right? Your inventory is, I have like a news feed of some sort, and I'm just going to magically now slot in ads that I can charge for. So what's the COG against making up literally some pixels and putting that into your newsfeed and selling content against that ad slot, right? So I think the big thing here is long term, and that's why WisdomTree went and put together really one of these kind of first growth-oriented thematic ETFs, where, as Jeremy mentioned, historically they've been very value-focused, right? So, but if you think conceptually and say, hey, over the long term, do I think that the power structure in these industries where platforms are now rising and gaining dominance, is that power and that value going to draw more towards the one or two dominant platform businesses, or will it remain in the hands of the linear incumbent enterprises? Now, we've seen examples where the winner-take-all dynamic is not as strong. There maybe aren't just one or two winners. We spoke about that yesterday, looking at the real estate industry, or We've spoken in the past about car marketplaces, right? Where these are more infrequent purchases on the demand side. Those network effects are a little bit harder to lock in and consolidate and have as strong of a winner-take-all dynamic as a result. I'd say you see a lot of those as being somewhat older marketplaces. That's kind of like that marketplace 1.0 model, kind of like an Angie's List, where you or you might be kind of, or like a Lending Tree, where you are kind of like a referral engine, but you don't really own the transaction from consumer to producer. Now, the basket of stocks does not differentiate between, hey, do you have a marketplace 2.0 business or a marketplace 1.0 business? All the basket of stocks is saying, conceptually, do I think these businesses as a whole will outperform or not? And that's really kind of the thesis. If you wanted to, and if you go to WisdomTree's page on the ETF, you can actually see every stock that is in this basket. There's 70 of them. And you could be the judge if you wanted to cherry pick and pick certain ones for yourself based on where you think things are going and have at it. But I think, conceptually, this has never been done before. And that's one of the things Jeremy was trying to get across is no one has really said, these are this new type of business model, and we're going to identify them in a quantitative, objective manner, put them into this basket, and then allow that to be a kind of thematic investment strategy. So I think Jeremy did a pretty good job. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.